Welcome. This is Carcino. For those who don't know who I am, giving you guys time to get on here. We're live. People call this, and they got me calling it the business channel. So my news channel, and everything that's news is news. No news is good news without Gary news. But anyway, glad you could make it, those who could, and we shall continue on and continue strong. Just wanted to give people time enough to get in here. For everyone else, you could just speed up to it because you'll be watching it later. Okay. I don't see anybody really showing up yet. I don't know if this thing is working. I think they're holding it up. I don't know if it's the reception or. Hello? Is this thing working? I can't even tell right now. Well, anyway, I just get to it and everybody could skip to it on their own time. They're playing around again. Obviously, you're the only one to come through so far, Mr. Payton, in 3 minutes. That's not even normal. But anyway, we spoke about the recession last time. A lot of people look for economic expansion and things like that, but there's so many other ways to look at homes and the market and trying to advance. Now, buying a home sometimes, unless it's a retirement home, okay, that's something different. But buying a home is not always the best move. And that's why I try to tell people all the time when you're talking about wealth management and things of this nature, buying a home is not always the best, avenue to go. Well, you look at what it you limit yourself as far as all the things that would be popular for you to do as far as investment. See, in one housing like mantra they have is that almost everyone is familiar with location, location, location. That quote is attributed to a real estate cartoon, I mean, not cartoon, tycoon named Lord Harold Samuel. It's all about location, location, location. But when you're in real estate, is that location the common phrase that you hear all the time? Real estate agents, they always help. supposed to help potential homeowners find the right home. That is a faulty premise because buying a home is not always a good investment. The waitress said I look like a cousin. What, you got a big tablet or something? That the waitress is involved? Leave her a good tip after you leave me a super chat. How about that? Well, you got to look at the numbers. If you look at the housing, the National Home Price Index, it increased from 6.2, which was in September, beating many estimates, and then the previous month of 5.9, and the 20 city index. That means home prices increased in all cities for September and posted an annual gain of like 6.2. As home equity is like the largest asset for most Americans. That outpaced a lot of investable assets for most people. The 6.2 annual return should be welcoming news. That's basically more than what home prices increase have been, boasted to by, low unemployment rate. Uh, and this is like an historical low in interest rates compared to the stock market, so housing, providing all that stuff, the Dow and all that, they provided annual returns of like over 18%. So, what do you mean? Yeah, this thing is screwed up. Next time, I'm just gonna run this up top because this isn't going well. I've had far more people with this on a regular average day. See, when you look at short-term returns, when you do short-term returns, the stock market, they represent a better market investment, but the home is viewed as the safer asset for the market investments. And most investors recognize that the stock market is volatile, it's risky, it's too uncontrollable, it's unpredictable. So oh, we can't dare do that. But the returns for the market investment, like they need to be higher for like safer assets due to the volatile, unpredictable risk. So home is safe. And it might still be a good investment, but it's not a safe investment as you think. See, the overall housing market might be safe to after like all this violent marketing stuff, but it's far more riskier than the overall hostile housing market that you are used to. You see, drawbacks and things have happened because of risk and illiquidity. A single home is not very liquid anymore as it used to be. If you live in an area with like one major employer and the employer goes out of business, it decimates your home prices. In a lot of ways, buying one house is like holding all your money in one company in stock. Okay, location is a part of it, but the surrounding factors around your home actually matter. Now, some areas have grown, like San Francisco, but others like Detroit, you see they've taken tremendous losses in the home market. So it's all about, like they say, location, 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 but it's not always true. We've seen great locations lose out because of businesses shutting down in the area, and it just decimate an entire town. The risk of single home ownership has an annual standard deviation of about 12%, which is close to a standard deviation of a traditional investment in portfolio of like about 60% stocks and 40% like bonds, which means like a home is not significantly safer than most investment portfolios, and it's usually substantially lower on investment returns. Historically, home equity just keeps up with the inflation and provides no real returns, and that's because it was viewed as so safe. It doesn't have to be big colleges in the area. But yes, you're right. All these things do play a role. But there seem to be some problem with this connection because they're not letting a lot of people get in. I don't know what's happening. So we'll just shut this down for right now. Sorry about that.